Hey everybody out there in social media land, your favorite property manager Noel Pulanco with HomeQwik, and today I've got the great pleasure to be with two of my good friends in the lending business, James.Igbinovia and James.Hobaica, and my middle name is James. So we just wanted to introduce you guys to James.Hobaica, who's just jumping into the lending side of things from a long time family business in the air conditioning world, which is always good. So it's always good to know people, right? that know a lot of things. And James.Igbinovia, of course, this is his team with CrossCountry Mortgage, and James has helped me on several investor deals in the past. So we just kind of want to talk a little bit to these guys about what's going on out there in this current and so a little bit crazy market. So James, obviously I work with tenants a lot, and eventually we want these tenants to be able to try to purchase their own home. Oftentimes they try to purchase the home that they're living in, and of course we try to sell it to them. So what can you tell us about what's happening with tenants? What do they need to know?
So a lot of the times what we find with tenants are they are looking for what kind of programs are out there, products. So we have VA, FHA, conventional loans. These are all standard government loans.
Sure.
And also private loans that allow them to be able to purchase into the market at 3.5% down payment.
Okay.
And these are typically names and programs that not everybody knows about. So if you don't know about these programs or what they mean, feel free to reach out, ask questions, and we can go into more detail on that.
So those are like some of the standard loans that have been around a long time, but I'm sure, like everything, they change kind of on an annual basis. So definitely if you need an update on what has changed in those loan programs, or if you don't even know what they are, like, when you come to me and you want to buy a house, I always say, talk to these guys first, right?
Yeah.
Awesome, James. So other James.
What up?
So I know there's different loan programs going on now. Obviously interest rates are a thing we're concerned about. But first, tell me a little bit more, like what programs are changing. Are people getting back into ARMs? Are those like a thing that's happening again?
Yeah, so to combat what's going on with rates at this time, people are looking at some options that can reduce their monthly payment. And so the adjustable rate mortgage is one of those options that exist. I think for the right client, there's the right use for the right client. And if you have any questions on what that looks like, there are so many different nuances and terms and different little things to know in an ARM. We definitely should have a full and in-depth conversation before you sign up or you go down the direction of having an ARM, so we can make sure that we're meeting your goals.
So you don't want to just fall for the sales pitch of, hey, it'll lower your payment. You really want to know what's included with an ARM and how it can
Adjust.
either benefit or negatively impact down the road, right?
Exactly.
Yeah.
And they're obviously not for everybody, but not every program's for everybody.
Correct.
Down payment assistance. So that's always a thing that for sure a lot of our tenants are always looking for, not so much our investor side. But tell me a little bit about what's going on with down payment assistance, and is that even available?
Yeah, so down payment assistance, with all of the volatility in the market, has gone through a lot of changes. Hedge funds, a lot of big money investors are behind this, and with the volatility, they're getting a little skittish. So the amount of availability that we had is definitely constricted. Right now, we're seeing anywhere from 0 to 3% is what you can get with the down payment assistance program.
That's still something.
Which is still better than nothing, right?
Yeah.
100%. So the guidelines are getting a little stricter, the rates are getting a little bit higher, but for the right client, that could be the right solution.
Okay. So tell me a little bit about my investor clients. Kind of the standard, at least from my experience, it's usually 20% down, and they've got to verify assets and all of that stuff. Tell me a little bit like what you're seeing now. How can investors take advantage of the market, and what's out there to help them?
100%. Yeah. So like you said, your investors have the opportunity to do regular conventional financing with 20% down. Little known fact, it's actually 15% down as the minimum with conventional financing. But we do have some additional options for some of those investors that have a more unique portfolio or income stream. And essentially what we can do there is we can utilize the rental income or the proposed rental income on the subject property and use that to help them qualify.
So the house that we're trying to purchase, we can actually foresee the rent and use that to help at least get through underwriting?
Correct, exactly.
Okay.
And it negates all of the need of any other income documentation or accounting for any of their other debts or properties they own.
Well, easy enough, because I know what the house is going to rent for. So if I'm helping an investor, we can pull comps. And is that what they're going to look for in underwriting?
100%. So we're going to need an appraisal that'll show what the comps are. Or if you get a lease, which I think you did for our last client, we can use that lease instead to help them qualify.
Awesome. Well, this is a short video, guys, but just wanted to give a quick update and not keep you posted to your screen all day long. So you see James's info on the screen. You see James's info also on the screen. Always contact me. If you don't want to contact them direct, I will connect you. But contact them direct, guys. If you need a loan, investor or tenant side, even first-time home buyers, these are the guys to check out. This is the team I trust. So thank you, gentlemen, and thanks for watching. We'll see you guys next week.
Thank you all. Take care.
See you guys.